Hello and welcome to my channel. This is Imi from iTradeAIMS.net, AIMS Stress-Free Trading. In this video, you are going to listen to me talking to Sam. It's a recording of a stream that I did in our Discord server. And in this stream, I'm explaining why I now trade with absolutely no indicators, how I learned this technique, and then we'll go through the concept of the famous bar, the trend candle, and how you can trade the daily chart, the hourly chart, and the 5-minute chart. Whatever your style, you can apply this. I was not always trading this. I trade with the Gator and the Awesome Oscillator, the AIMS indicators. I still use them, and if you're a beginner, you most probably will have to start there. But in this video, we're going to talk about how we can use just the price and the price levels on its own. Hit the like button and subscribe to the channel. The famous bar. You are the famous guy with the famous setup. If you remember.
Yeah, I started noticing this, and I'm liking it.
Yeah, and before you fall into the trap, I thought I'd quickly clarify that.
Sure.
So we know what a famous bar is. Basically, in the trading world, it's known as the trend bar. You know, people come up with strict, different kind of interpretations. That's just waste of time. So, you know, like this is on the DAX, we see a trend candle. That's it. Why is it a trend candle? Because of the context. So if you look at the candles to the left, it's far bigger than that. It's a bigger range. And if you're familiar with the market, then you know that you will know. If you're familiar with the market, you would know which candle is actually a trend candle. It's bigger than the others.
Correct.
So if this was our trend candle, and if this was our daily chart, you would go to a lower chart. So if I went to the 5-minute chart, I have this. So the caveat with this is that a trend candle on its own, just like any other candle formation, is actually nothing. Context is everything. So remember when famous started to fail, and you said famous is not working? How could it be that a pattern is a very good pattern, but it doesn't work? Let me show you on this New Zealand dollar chart. So what would you say around this area in May? Is New Zealand dollar trending?
No, not at all.
It's in a range bound.
I can see the trend bar.
Yes.
That big red famous bar.
You see this one
within the range.
Yeah. So this should be a famous
the
setup.
one before as well, right?
This one is not a trend bar because, you know, it has a bigger wick.
No. Sorry, I'm talking about the big one around 6 May.
Yeah,
6 May.
That's a huge trend bar. This is a huge trend bar. But you can clearly see that famous would have failed.
Yeah.
Because the next day you have a famous on the 15-minute chart. So because I'm recording it, I'll actually explain. Let's suppose you, I'll go to the hourly chart. When we see a day like this, then on the next day we want to go long. When we see a day like this, then on the next day we want to go short. Because this day, 12th of May, would be the famous bar on the daily chart. That's what I was trying to explain to you. So look at that, 12th of May. So context is very important. If you were to find your famous setup on the hourly chart alone, and then you drop to the 15-minute chart, you took the trade, this would be definitely a rent, and you could have avoided it. Now, in normal terms, when we look at trading, we're like, you know, you're not supposed to be looking for ways to, you know, avoid losers, because losers always will be there. But it's not always true, because what if there's a fundamental flaw in your method, and you can actually avoid? So let's take an example of, first example of this candle. So this is a nice strong candle, right? The 7th of May. So suppose you were not doing the daily analysis. You were on the hourly chart.
Hourly chart, yep.
That's your 7th of May. Definitely Sam is going, that's it. I'm going to be trading this currency tomorrow. On the 15-minute chart, it's going to be a famous setup, right? So let me go to, because it's 7th of May, on the 10th of May, on Monday, it's going to be famous. I'm going to the 15-minute chart. Here you go. Didn't get a famous setup, but if you did, most probably you would have a losing trade.
Correct.
And the beauty of this, okay, let's do another example. I think this is the 12th of May. This is also famous. Let's go to the 15-minute chart. This one. This would be a loser, right? We can see that, right? Can you?
Yep.
So this would be your short signal for the famous, but it will be a loser, and you could have actually avoided it. And the trick of that is this. I'm going to go to these charts here. When the market is in a range, like so, right? The trend candle, the famous bar, becomes a reversal signal. Did you see that short, or did you notice I posted a short on New Zealand dollar from here to here?
Yeah.
Because I saw this trend candle and I put a limit sell order there with stop loss up there, and I targeted these lows.
Yeah.
So now if you see this as a trend candle inside a range, you don't drop to the 15-minute chart for the famous setup.
Okay. Yeah. That
so
makes sense.
That's what I wanted to explain to you, that context is everything. Wasn't this a famous setup?
Was.
It was, right? But it would have failed.
Yep.
I mean, in this case, you didn't really get a signal, but it would have failed anyway. But if you knew that it's in a sideways range, you would easily have avoided it. So you see here a trend candle. So if I go to 30th of May on the hourly chart, 30th of April, very strong move, right? The next day should be famous, but it fails. And you could avoid that. Why? Because it's hitting the box lows. It's within a uptrend, and that uptrend is turning into a trading range. So next example. Oh, DAX has turned around. Oh, I should have timed my exit here for my this entry. Never mind.
I paid rent on GU. I try and get in using famous bar.
Okay,
but it looks like it was within the range.
Oh, there you go. So you have a live lesson. See, you have the famous bar. I actually have a long here. I actually did go long, because what I see right now is I see this. I'll show you on the daily chart.
The bar is within the range, right?
Yes.
The famous bar.
But I'll show you the daily chart. So I've updated this bit into my trading plan, that for my swing strategy, I'm taking my levels from the daily chart, and then I want to play those levels on the hourly chart. And how do I do that? So I see this high of this candle, this low of this candle, and the close of this candle. Can you see I've drawn a line there? Right?
No, I can't see it. I think it's not updating.
Now?
Yeah, I can see the chart, but the high and low showing, the pointed, the drawing, all I see is just the chart, MT4 daily. Were you pointing something?
No, are you looking at the wicks?
Yeah. Now I'm looking.
See, so I mark these wicks. Go to the hourly chart. What is it? It's these levels, right? Then I see that market has dropped to it, going sideways, I have a trend candle here. At the close of this trend candle, I went long and I put my stop loss below here.
Why not short? Is that because that trend bar is within the range?
It is in the range and it's hit
Yep.
support.
Yep. Yep.
The bulls are going to take charge.
So say for
Actually-
example, if that bar would have the low of that bar and close of that bar would have gone below the range.
Then I'm short.
Okay. all
Take
right,
this
okay, makes
candle, put it here, close it here,
sense. Yeah. Yeah.
and I'm short.
All right.
Because it's
Yeah, makes
defeated
sense.
all the buyers and sellers here.
Correct. Yeah. So I
Right
made
now,
a
the
mistake
buyers have
today.
taken control.
Yeah,
So-
so I just got excited and jumped in, but like now it's making sense when not
Yes.
to look at the famous bar.
That's the thing. People get lost in one candle formations, and that's a
Yeah.
fallacy. So cherry alone is nothing. Pin bar alone is nothing. Inside bar alone is nothing. But obviously, the strategy for the
Exactly.
inside bar that you're using, it's a different thing. It's not based on the how great the inside bar is. It's actually
Yeah.
that strategy is based on mathematical manipulation of the market. You know,
Yeah, so
it's-
I actually avoided. I saw the famous bar on GJ as well. Actually, there was a seed on GJ, but I didn't like the formation yesterday. If you look at the 17 and 18, I didn't like the way it retraced it. So around the open, I didn't take the 10, and I wasn't available anyways. But I looked at the pattern before, and I wasn't interested.
on the hourly
But
chart.
then, yeah, on the hourly chart, yeah, sorry. Yeah, but then this trend bar could have been avoided as well because this is false positive.
These ones,
Yeah,
you see, for
yeah,
for a trade for the day, it was a great signal over here.
yeah, yeah. Yesterday was great. Yep, yep.
But for the way you are trading, your methodology, for that, it's not a good signal.
Yeah.
So, did you take this seed
No, I filtered it.
based on what?
I didn't like the way it retraced, like 17 and 18 candle. If you look at the 18, it snapped back straight away, went back to the EMA. You know, it wasn't natural retracement.
What do you mean 18,
Rubber
17?
The bar yesterday. If you look at the 17 bar, which was like a super. No,
Hold on.
yesterday's bar.
This
On
one?
H1, yeah, those two big one, yeah.
Uh-huh.
The second one, see that the way it retraced, it's pretty much like all the way back, more than 50%.
And so what? Doesn't matter.
So, okay.
This doesn't matter. For your Forex seed method,
Mm-hmm.
you're taking these seeds to convert them into a free trade, which would be a free trade here, and you don't have anything to do with this analysis on the hourly chart.
Okay.
What you're looking at is this. So what do we see here on the daily chart? An extraordinarily beautiful
Uptrend.
uptrend. But it's away from the 20 and it's all the way up there.
Mm-hmm.
Could it be possible that a very big 600-700 pips strong trend starts from there?
I haven't seen that like a strong indication on daily yet, so it's pretty much like
How
going
would you
up.
see? What kind of indication will you see? There are none.
There are none, but I mean, you know, the current pattern. I don't know.
So
The
hold on,
only
let
way
me
can
take
get
you there.
some
Let me take you there. Suppose you're here in October last year,
Yeah, yeah.
and you're taking a seed on the hourly chart long. Was there any indication that this was going to happen?
No.
No. When you were taking some, and I'm not talking about this. This is the time frame from running the trades. This is time frame for running. So suppose if you were going long somewhere here, did you know this was going to happen? No. Well,
No.
you knew it is possible, but you didn't know if it will happen. And you know the
Yeah.
whole game is this: if you found a seed somewhere here, and then you started
Just take
taking
it.
those seeds and you just trailed it using the 20 EMA,
Yeah.
you got yourself a 1,000 pip winner with a 20 stop loss. That's the game. So from your point of view, this type of analysis that you did not take this because of this move here, that's wrong.
Yeah.
You don't
Okay,
need
alright.
to do that. But
Sure.
if you look at the seed itself, anyway, we were talking about the famous bar, and we're already into, I don't know, 10 minutes. So if you were looking the hourly chart and you saw this famous bar, this is a great indication that there's a 70% chance that the next 1 to 2 candles will also be trending. That's the
Okay,
thing.
quick question.
Right.
Quick question.
Mm-hmm.
For to spot the trend, the famous bar on hourly, how far do you go back to validate the range? So you go yesterday's range and make sure the famous bar you see today is out of yesterday's range and it's good to go short or long. Is that how you validate?
No, my analysis is all from daily chart.
Daily, okay.
So I won't look at a famous bar on the hourly chart.
On H1.
Yeah,
Okay.
unless I see something. So, for example, I'll give you the Kiwi example again. On the Kiwi, it's going sideways. And this is kind of difficult trading, but
Yeah.
it's actually not that difficult. It's a lot of people find it very difficult. But anyway, I saw this, and then the inside one, and I had that level and this level printed here, right?
Yeah.
I'll give you the euro-dollar example as well. So I saw a
Sure,
trend
sure.
candle, and I wanted to catch the
Yeah.
reversal of this. So if I go to the hourly chart, I saw this pullback on the hourly towards the evening. I went short
So
here.
fruit. Perfect fruit there. You could have gotten that perfect fruit that's
Here.
hitting to your top line.
It doesn't really matter. That doesn't matter, because
Yeah.
I saw this, that level being hit and this level being hit, and then a strong. You see, if you look at these two candles, this is a strong outside bar, bearish outside bar. The 2 hour two candles together. So this is also a trend candle. So if I saw this trend candle coupled with that information, I would go short at the close of this and have my stop loss up there. So 25 pip stop loss, and I know what I'm looking for. I'm looking for these lows. Sadly, I entered. It was still a good trade because I took my entry here with 15 stop loss, and I had my target point set at these levels.
Wow.
So the next day, without even looking at it, 15 stop loss, 60 target, got hit. But if I set the target, the other one, that one got hit as well. So now this became a trend candle on the daily chart. But I'm not interested. Why? Because my analysis is that the market is in a range, so that means it's going to go long from here. Ideally, I should be looking for a long setup. I should have actually gone long at the close of this trend candle. See, look at this trend candle. As soon as this trend candle closed, it hit my level. So if I was paying attention, I would have gone short here, or I would have gone short at the end of this candle and put stop loss here. So again, 15 pip stop loss, and I still have a 1:2 trade. Look, 30 pips in my favor. It's already gone. And if I've gone short...
Long? You said short. You said long from there, right?
Yeah.
At the end of
I know. It's going against your mindset. You're like, what? I would go long at the close of this bear trend candle. Yes.
Okay.
I told you, in the last few months, I have switched everything around in my brain. Everything has flipped. I see the market differently. And I laugh at what I was doing before. So, again, let me take you to this. I've analyzed the daily chart as a range. I've already traded from the high to the low. Then, hold on. Yeah. Then what I've done is that I've seen this trend candle all the way come down, and I have an established level. Look at this. Look at the hits. That's a very established level for me. So I have an established level, and it hits that level straight away. If I was confident, I would have actually gone short here straight away and have my stop loss 10 pips below this.
Yeah.
If
So
I wasn't,
it's been like you playing 2020 there. You know your boundary, you know your ranges, and you
yes,
try and hit into that area.
exactly. So when this is basically all the fielders are on the boundary, so we can only take
Yeah.
singles.
Yeah.
So what we're doing is that,
Yeah.
you know, sometimes they put a fielder knowing that this fielder will give them one run.
Yep.
And the batsman takes advantage of that. He knows that they've put that fielder there because they want me to take a single there, because it allows them to have the fielder somewhere else where he can hit a 4. So on an easier spot, they put that, you know, that all of that technique. So when it goes sideways, we start taking these small trades. I'll give you an example from DAX today. Guess what I did with DAX today?
Oh, there is a seed on Swissy, a nice tiny one. I'm already in. Probably I can add in.
Oh. So we have on the hourly chart of the DAX, we saw a strong rejection, a candle
Yep.
with a tail, right? So
Yeah.
we had a good trade based on the trend candle. So if you look at the trend
Would have
candle, you drop to the
been-
M5, take
Yep.
the trade, trail the candles, you have a pretty lovely trade. What else was I talking about? Yes, look what I did on M5 today. So you see how pathetic, ugly it is?
Yep.
But you know that for DAX, I mark my range for the pre-market. So the pre-market range was
Yep.
this.
Yep.
That's the Frankfurt Open. That's the London Open.
Mhm.
And as soon as this happened, on this next candle over here, I was short with 10 stop loss. And it went down in my favor. No, actually. I went short on this one. And it went down. So I made 20 there, then I made 20 there, then I made 10 here.
Correct me if I'm wrong.
Uh-huh.
You actually catching fruits by marking the level. So you're not taking fruits blindly now. So you're quite open. You mark your levels. If that breaks and if you see the trend, you go with the trend. If you see the rejection, and if it's going in opposite direction, you try to take that opposite direction, right? Which eventually becomes the trend.
The idea is simple. I ask binary questions. Is the market on the time frame that I'm looking at, right?
Yeah.
So I ask, is it trending or is it range bound? So if the answer is it's range bound, then I ask a question, is it a tight trading range or is it a wide trading range? If it's very tight, let's suppose it was like in this region, very difficult to make money.
Yep.
But this trading range, there is
But
possibility
wouldn't
to
you
make
take-
money, 20, 30 points.
But wouldn't you take that fruit because you knew the level beforehand and
This
and
here?
it's reject? Yeah. Or no,
Well-
because you would be out with the
No,
next
I'm
candle
taking shorts from there. This is too late for
from
me
there.
because that's the
Oh.
middle of the range.
Okay, I see.
Now, if this was a formation within a trend on the hourly chart,
Mm.
suppose there was a downtrend on the hourly chart and I saw this formation on the 5-minute, then I would take this fruit to catch this.
Yeah.
But today what I did is that I scalped it there. So this is my process. I've actually put that process in the trading plan as well. So if I see that it's a trading range on the 5-minute, I will take scalps. then I would see if it breaks out. So I had an alarm here. I left it. And then I remember Emma said, oh, it's hit your alarm. And I was already watching it. I was like, okay. So can you see this trend candle?
Mm-hmm.
This trend candle closed outside the range.
Correct.
So if I went short straight away here, my stop loss would be
Yeah.
up there above the trend candle. And guess what?
Wow.
My profit is 72 points on this, or 43.
Wouldn't
If I
that
exit it
be-
here, then it's 43. If I exit it here, then it's 67. If I waited long time, which I did, then I got 46. But
then
I didn't
you
take
have
that.
wider stop loss, right? So not the ideal RR.
Yeah, that's another fallacy. This RR thing it's only applicable to the seed method. For the seed method, the RR is the most important thing.
Okay.
The smaller the seed, the bigger the lot size. If you want to trade this way, which we did for years, I think the ATM feature has actually hurt us a lot. Because what ATM would do is that when market is in a tight range, low volatility, it will give you big lots. So basically what you're doing is that, in low volatility, tight ranges, the probability of success is low.
Yeah.
So what you're doing is that you are taking bigger lots where the probability of losing is higher.
Yeah.
And then when the market started trending, the probability of winning is higher, but because the range is high, what you're doing is that you are taking smaller lot sizes when the chance of winning is higher. So that's stupid. Now, if you were to go with the same lot sizes of the low volatility, let's suppose your 10 pound a point is your normal lot size for a 30 stop loss. Let's suppose that's your 1%, right? Now the market goes to a higher range and you still go with 10, you will lose more, but you will make more as well.
Yeah.
Now if you trade with the same lot size in low volatility, the ATR will be smaller. So when you lose, you will lose small. See?
Yeah, damn. Yeah, ATM has got these gotchas.
Yes. So suppose we, I can't even find the low volatility periods. Like, hold on, over here. That's the range. On this day, the market is, was it this day? Let's go to the 1 minute chart and I'll show you some examples from. So like, for example, this is your low volatility day, right?
Yeah.
The whole range here is 22 pips. If you were still trading it with the same lot size, if you entered here and you got out, your loss is only -4 and -5. So if your lot size is the same, you only lost, say, 40, 50 pounds. But when the market went in your favor like so, and you had a 20 stop loss, and you got yourself a 70 point profit, 70 into 10, you made 700 pounds on this. Your risk was 200 if it was going to go up. So that way, that's why I have my lot size calculated at 30 points. So every time if I go short here and I need a 32, 33 stop loss, then I know that I'm risking slightly more than 1%. Right?
Okay.
So
Yeah.
if I am happy with it, I will go with my normal
But
lot
then
size. Otherwise, I'll
but
go
at
with
the time-
half.
Sure. So at the time you know that you have a higher chances of being right, so that lot size will pay you off.
Say again?
So you're going slightly higher than 1%, but at the same time, you know that you have higher chances of being right,
Yes.
and at that bigger lot will pay you off.
Yes. Because,
volatility.
we're not being pedantic about it. It's just 2 or 3 pips more, so it's fine.
Yeah.
And then I had to stick through to my idea. Now here, tail, I'm thinking, maybe he wants to go back into the range. And this is why I didn't trade this. I did not trade here. I waited for it. And then when I saw this
Yeah,
candle,
that's magic. Yep.
yes, I went short
magic.
straight away. And my stop loss was up here, 20 pips. And then I added here, because it's a trend candle, right? Trend candle with no wick at the bottom. I went short straight away. Again, my stop loss was up there. So here my stop loss is now 35. And then I let it run.
Okay.
And then I added on one more time. And I did not get out here because I was on this call. I got out here. So I had plenty of profits that I gave back on this, but that's fine. Because, you know, if I get out here, then why didn't I get out here, kind of thing, right?
Yeah.
You have to just let it run as much as possible. There was nothing telling us whether we should be out of this or not, apart from these levels here. So, you know, letting it run is important. But on a day like this, you know, when you get this 180 pips, that kind of is a good range. But if you get out with 180 pips, obviously what would happen is that, where's that day? Yeah, this will happen as well. See, on the low bot strategy now, look how simple it is. So if you're a beginner watching this, right, I tell you this. Look at the 5-minute chart, not the 1 minute or nothing else, or the 15-minute chart if you like.
Yep.
When the market is in a range like this, wait for it to break. You want it to break, not slowly and meagerly. No, you want it to break like this. Strong trend candle. After that, you want to wait for a pullback. And guess what it is? You want the 10 to be below the 20 and 20 to separate. And then you have a pullback. So anywhere around this area, if you took a trade, and this is the important thing, Sam, that's where we got it wrong in the past. We had plenty of losers. Why? Because our stop loss placement was incorrect. So when the pullback is happening, right? That's your pullback, that's your pullback, that's the first time the low of the candle is broken, right? Over here.
Yes.
So if we went short here with our normal mechanism, we got stopped out here.
Yes, that's right.
That's
and
wrong. Because technically, that's not the right spot to have your stop loss. So if you have a 30 stop loss, my stop loss was up there. Although, when I say that today, I made a mistake.
Say that. Yeah. I'm getting it. I'm with you. I'm listening.
Yeah,
I know what you mean.
Because that's where the swing high is. Ideally, technically, the stop loss should be there.
Yeah.
But I don't want to wait all the way there. So I thought this was enough as well. Because by the time price comes to this level, I am definitely proven wrong. Right? So stayed in it. Today, stupidly, I got... Hold on. Let me... I think it's in the chat room. I posted. It clipped me here within the spread. It didn't even touch. The spread touched me. And I knew my mistake. So I went straight back in. I knew my mistake because my stop loss should have been there. I went straight back in. But ideally, my stop loss would have been there. Then you have your add-on. And guess where your close is? Close is above 10 over here. You get out.
Perfect. You don't give back.
You got yourself a nice 1.5R or 2R. No headache. Obviously, if you're trading the low bot method, you have one push and a pullback, and second push. After the second push, you see it's far away from the 10 EMA. You're obviously getting out somewhere here. If not, then you're out here. Because that is a... Now, pay attention to this. This is not just a close above the 10 EMA. You see, EMA closing is also a wrong thing to do. You don't want to just close, because sometimes it just closes softly and then bam, it goes in your favor again. So for example, if you were blindly following the EMA, right? You got in at 11:05. Guess what happened here? 11:15. but Imi, it closed above the 10 EMA. I got out. No,
Yeah.
you're using the EMA wrong. You were in a loss. You're in a loss position. Your stop loss is up there. So you don't get out here.
Mm-hmm.
Yes, okay, there's another way of doing it. If you want to get out here, you get out to minimize your loss, knowing that if it went in my favor again, I'll get back in.
Mm-hmm.
So if you got out here for minus 10, you're back here to take your profits. Just like when I got out here, I thought, that's my mistake. I put my stop loss incorrect. The market is still going down. So I went short again. And there you go. So the difference between this close of EMA, this is not close of EMA that I'm getting out here. This is a strong trend candle, a bullish trend candle. It's clearly telling you that the exhaustion has happened. And even, look at this. You have a big tail on this candle. A fruit, right?
Yep.
The fruit mechanism was one of the best things that we have gone through. We should never have actually stopped looking at it, because fruit looked at bars quite a lot. But this is even better
I'm
than that.
quite liking it. Yeah.
10
I quite
EMA,
love it, like
20 EMA and price. That's all you need.
that's all. Yeah, that's all. And marking the levels on
Yes,
H1 or
look.
D1, and then pick the right fruit.
Exactly. The 10 and 20 is your gator. This is the green line, this is the red line. The cross of the 10, 20, right?
Yep.
The cross of the 10, 20 is your cross of the AO.
AO.
And the peak
As
of it,
well as
look,
the gator.
you know, when the 10 and 20 goes far away from each other and then it comes back like this, and then you have the price analysis as well. That's it.
Yeah.
Your AO is going back to zero line, you're out. It's better than that. But more important than that is the market in a range or in a trend? When it's in a range, you have either option to scalp, or if you don't like trading in the range, like we did, you know, we always avoid it. We can still do that. We don't want to trade in a range. So around this time, you don't trade. When the range is broken, you look for your trend candles, you look for your pullbacks, you look for your seeds, you look for your cherries. Any excuse to get in. Why? And while we're at it, let me clarify this as well. I don't necessarily have to look for pullback. Can you see this? If I miss this, I'm short on this. I see this, I'm short. Because my stop loss is up there.
You see market differently now, right?
Yes. My stop loss is up there.
So you don't sit on your hand, because you know that, okay,
exactly.
If you miss first time, the next bar is also the confirmation.
Yes.
So why sit outside?
Yes, my risk is different, but I can still trade.
Yep.
So I show you this. Now, ideally, when you look at pullback, backtesting, you'd be like, ooh, if I just went long on this and my stop loss here, I got myself a 280 pip winner. But that's not how it happens in trading, does it? You know, over here,
in reality,
yeah, we are thinking, oh, the market is, look at it. So beautiful. Such a beautiful trade, right? But then, exactly like what we're seeing today, look at it. Trend candle, strong trend candle. It's telling you something. The market is changing. Look, here, lower low. But here you have your first indication this low is not getting broken. And it failed. And then you have a trend candle. Now you're thinking, this might be changing. Then price goes above 20. Then even 10 goes above 20. And now you have a range here. I remember when I was trading this, I considered this as a range. And when the range was broken here, and then it started going sideways, I'm looking at this as well. I went long here on this candle. And then I held it. I held it and I held it and I held it, because all I was looking at was the 10 EMA. And I got out there, somewhere there. That was a massive winner. Now, was my stop loss here for this? No. Range was high that day.
Right.
My stop loss was below this. I had a 50 stop loss.
Absolutely.
Because that is where I would have been proven wrong. And if this candle kind of closed, the next candle closed below the 20, my stop loss would have been here, but I would have gotten out. I'd get out here.
Yes.
Now,
so how do you calculate your SL in this case? Are you placing trade manually, or you have a script? You modify your script?
You obviously haven't read my trading plan correctly. There's a, I have 3 lot sizes based on 30
Okay.
pips, right? So if I think that I need more than 30 stop loss, I go with my second position lot size, which is which is half.
Mm-hmm.
So based on 2 things, I will select. If I have high confidence and the stop loss is less than 30, I will go 100%. That means full 1% risk. If I have low confidence and the stop loss is 30, I'll go with half. If I have high confidence and the stop loss is required is more than 30, I would go with half a risk. Right? So here the confidence was high, but stop loss requirement was more than 30, I went half. Which means that if I get a 60-point loser, it will be 1% risk. Make sense?
Yeah.
But sometimes I would ignore that and I would go in a way 200% because I would go 100% lot size here and I will have my stop loss 30, 40, 50 pips away. Which means I'm actually taking 2% risk. But I know that it's worth it because the probability of winning is very high.
Mm-hmm.
So, and the final point I want to make is that if you didn't take this entry because it was sideways, and then you saw this candle, you know what?
Mm-hmm.
You go long. At the close of this, you go long. Have your stop loss somewhere here. At the close of this, you go long. Have your stop loss here.
Yep.
Just keep going long. Because you know that if it closes on the 10, you'll get out. So if you went long here, or here, or here, or here, 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 there, on any of these entries, you made money.
Yeah, absolutely.
This is how the professionals trade. They see things they're in. Think about it.
Yep.
Why is the market going up? They're buying it. The bulls are buying it. They're buying. There is some selling here, but the bears fails. There's some more selling here. Look at this tail. At one point, this tail would have looked, this candle would have looked like a huge trend candle. But towards the end of the candle, it wasn't a trend candle. And you'd think, oh, it's fruit. Let's go short. No, it's a trending market. That's why we got frustrated with fruit. Fruit is not for trending markets. If you want to use the fruit, you want to use it in a wide range. When it goes really wide, like so, and price is going up and down between it. Hold on, I'll show you. See? Fruit like this.
Yeah.
You know that the market... Oh, this is the perfect example. Fruit was always only for the very extended stretched markets. This.
Yep.
See, a stretched market, gone far, and then add to this something very powerful. Which we used to take fruit without this, but that's incorrect. It doesn't work. I'll show you, good you mentioned that, so I'll show you this final example. See this low of this 4th of May?
Yep.
Now, put a line there.
Mm-hmm.
Suppose you have a line there, and on the 13th of May you saw this, and you saw this fruit.
Wow.
Now you have confidence.
Yes.
Now you're like, oh, this is a stock market. When it goes down, they start to buy. And this is exhaustion. You buy here, and guess what? Look what you caught. Huge.
Yeah.
And then here, okay, I went short here. And this is very beautiful. I love this. Let me show you this. This is what I'm saying that I change my trading. See this high? The all-time high, right? I put the line there. Let me take it to the hourly chart now and prepare to be amazed. Guess what? So forget about these lines as well. I don't care about those lines. This is what I care about. See this? High, all-time high. It's getting hit, and now I have an outside trend candle. Now I'm interested. I'm going short. Stop loss up there. Oh my God, Amy, you're going with 80 stop loss? Yes, because the probability of success is high. 80 stop loss is better here than 30 stop loss, say here. because
Yeah.
this is about to happen.
You missed that move. You missed the chance.
But guess what I did? I didn't go on the hourly chart. I didn't go on the hourly chart, did I?
So you went M5 and catch it from there and
Oh
let it
yeah,
run.
I was watching it during the London Open here. Now there was a little problem. Price was above the line. You know, the all-time high, it was above it. So I was a bit confused. I was thinking, is it going to continue going up today? But then this candle happened. See this?
Yeah.
So combine these two candles and it's a pin bar. Here I was short. And my
where
stop
was the
loss was there.
On daily or just there?
No, what do you mean?
So you set the stop loss just above those pin bar and then converted that to the D1?
No, I manage this trade on the hourly chart because this is 5 minute, right? So that's what I do.
Yeah,
I take levels from the daily.
80 stop loss.
Okay.
Did you take the 80 stop loss based on the daily?
No, if I was trading it on the hourly, then my stop loss is based on the hourly candle itself. That's the 80 stop loss.
Okay.
Why? Because that is the high of all of this range.
Correct. Yep.
Right? And it's the high of this candle. You know, the mechanism of trading a trend candle is that you either put a pending order below the low of it and stop loss up there, or you just go short at the close.
Yeah.
But in my case, by the time market came here, I was already short. Because, you know, I trade DAX on the London Open. So I went short here, which literally came to exactly like the close of the candle. You know, close of the candle, actually it was far better than the close of the candle. The close of the candle is here. The close of the candle is here, by the way. Right? So by the time candle closed, I was already in 30-point profit.
Yeah.
Because I'm playing the level. I'm playing the level. Now, imagine if you were trading only the hourly chart, right? You did that analysis on the daily, and then you want to trade this candle, right? But you want to get cute with your stop loss. At the close of this candle, you go to the 5-minute chart and trade this pullback. Guess what? If you traded this pullback with your 30 stop loss, right? You trade pullback here and your stop loss is 30 up there. Then you let it run all the way until this candle.
30 is the default. You
see
30
this?
and 50. I'll read your trading plan. Yeah.
See this candle. This is a huge reversal candle. It's telling you, get the fuck out of here.
Go up.
It's going up. So you would take your profit. So you took yourself 367 profits with the 30 stop loss.
Yeah. So you're watching whole day, right? It's not automated. You're just watching whole day and exit based on or you trail the candle.
Well, in this case, I was just, it was just going nice in a channel. So this is what I do. I want to see the market if it is going in a symmetry. So look at it today. Let's go to the 5-minute chart today. See, that's the symmetry of the market, right?
Yeah.
It was sideways there. Breakout, pull, breakout.
Yeah.
Now, two ways to see this symmetry. Either trend line, or you can have the moving average. And then you want to see what the candles are telling us. So the candle will tell you before the moving average or the trend line tells you. So if this is the symmetry of the channel, the symmetry was broken straight away here. This was actually a very good long for me. Normally, I would actually take long here for the M5 chart. But I was streaming and talking to you today, so, I haven't traded this. But if you look at it, trend candle, pullback, what is this? Cherry. We don't need moving averages. We need price. Look at that. You go long there, your stop loss is here, 30 pips, right?
Yeah. Even it looks better on moving average. I just checked it right now as we speak. Yes, it's.
Moving average is it's a good mechanism, but it won't let you go long here. The moving average will stop you.
No. Yeah.
But you could go long here.
Yep.
You see here, trend candle, small trend candle. You would see me go long here. If I see this, I would put a limit buy order here below the low of this. Why? Because if I go long and the candle closed below these two lines or below this, I'm out. But I got myself an early entry. And okay, if you were to ask why you do that, the idea is this. Let me take you to the 1 minute chart. See this? It's automatically a pullback entry.
Yeah.
Just look at this beauty. Look at it.
Yeah.
So this is a bear candle. I'm buying the low of this candle without even knowing this bear candle has closed yet. Why? Because when you have a 1 candle or 2 candle pullbacks, on the 1 minute, it's a beautiful pullback. Look at this. 1, 2, 3, 4 candle pullback. Bang, you're long and you're getting out now. You know, if you were trading the 1 minute chart, this is your entry. 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 It was a beautiful day for the 1 minute chart.
Yeah.
But you and I know that this is an illusion.
Money is in letting it run.
Yeah, no. The thing is, on 1 minute chart, you just are not that focused.
Yeah.
On days, there will be days where you will catch all of these, and there will be days where you will catch this one, and then you will catch this one, but you will miss this one, and you would miss this one, and you would catch this one. That's the problem with M1.
And too many decision-making options, right? So you need to make decisions too many times. Whereas in higher time frame, you make less decisions, so you get more time to, think over your decision that you're making.
Exactly.
Okay, why should I do that? Yeah. With M1, you don't get that time.
For some reason, on M1, what happens is that you can't have this overall view of the market. You'd avoid those things, and your emotions would. I think there's the human thing. Only few traders are able, will be able to trade the 1 minute chart correctly. And if you look at the 1 minute chart here, you know this moving up and down, this tick, 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 up and down and up and down.
Yeah.
I think biologically, our emotions are slower than the 1 minute chart.
Yeah.
You know, by the time you get out of the grief of losing, by the time you get out of that grief, you miss 2 beautiful opportunities to actually trade long.
Yeah, that's correct. Yeah. And with the higher time frame. Yeah, absolutely. And with the higher time frame, because you get a lot of time to think and reflect on your previous decision, because the entry between two, like the different entry between the period, allows you to think, reflect, and correct that mistake, right? Which you don't get it in M1. Yeah.
Exactly.
So like I said, like on G1, I paid the rent, but now that I reflected it, I realized why that famous bar was the wrong entry. So I wouldn't take that anymore for the next entry. So it saves me heaps of rent in between. But if that would have been on M1, I would have been on all
and
sorts
you would forget. You wouldn't even learn from it. That's a very important point. You'll make a mistake on M1. You would take so many trades and so many mistakes that you would have no time to reflect over it. You will not learn.
Correct. Yeah.
That's huge.
And even though you have stats, right, that stat doesn't make much sense except winning and losing and RR.
Exactly.
From strategy perspective, you can't reflect.
You can't reflect. There's so many trades, and the day went well, the day went bad. The day went well, the day went bad. That's all you're learning. You're not learning anything else.
Yeah.
Unless you go meticulously into every trade. But if you trade the hourly and then that's even better. Like you said, trend candle inside a range. No.
I'm still reflecting, because I'm still exactly reflecting. Like I took that, I got excited, but yes, I should.
This is where you should be excited, getting excited. I know you'll be asleep around here, but look at this.
Yeah.
Oh, let me give you an example. if you saw this on the
Yep.
9 o'clock candle, and pay attention to the
Mm-hmm.
9 o'clock candles, by the way.
Yeah.
You know, the FO candle, when it's a trend candle
Yeah.
in the direction of trend, bam, you want to go long. But
Yeah.
look at this. This is a trend candle right
Yeah.
at the resistance. But look
Yeah,
at this
yeah,
one.
yeah. And it closes within the range.
Yeah, it closes within that range. So while you're thinking it's a... The reason I don't like moving average is only this, is that when you don't have the moving average, you only look at price. At this moment, this market was in a range.
Mm-hmm.
But the moving average will make you think it's in a trend.
Yeah.
In reality, it was in a range. It went into trend here. That's the trend phase. And by this time, it's back in the range.
Range. Yeah.
Whereas the moving average, if I bring the low bot strategy again, the template, look,
Makes you think, oh, you are with the trend. Getting
you are
in
with the
on
trend.
short.
See here, you think it's in a trend, but actually it's failed to. But if you train yourself to look at price and the moving average in context, then you know that because it failed to break the high of that,
Mm-hmm.
it's possibly still in a trend. But if you took this trade, it would still be not a too bad trade. Why? Because it's the first candle of the Frankfurt Open, and ideally your stop loss would be even below this. Somewhere, it should be somewhere here. But for this case, you can put it here, 35, 40 pip stop loss. You would stayed in this trade and you would have actually closed it the next day over here.
Yep. Question.
Mm-hmm.
Do you think the just in current example that you explaining, do you think the box would have made difference there in decision making? Because with the box, you know that price is in the range. Just look at the glance. Yeah, just at the
Yes.
glance, you know that.
Yeah, the box, that's what the box is for. It's levels.
Mm-hmm. Yep.
You know, when my first indicator that I started using back in 2010 was the box, and I did not call it the box. I call it AIMS levels. It was when Steve came around somewhere in 2012 or something, 13. He said, should we call it AIMS box? I was like, yeah, that sounds good. But actually, boxes, it's not about the box. It's about the levels. I wanted to see the levels. So the fractals create those levels. You know, a fractal is a great level because...
Visually, at glance, you can tell. Okay, yeah, this is my EMA showing trend, but like it's within the level of previous box.
Yeah,
or
the
something,
box
right?
is amazing.
At visually, yeah.
So get rid of the gator. Look at the box. Look at this.
Box in itself is a good decision making, to be
Yeah.
honest. If you combine with EMA.
But I don't want to trade breakouts. You see, don't want to trade breakouts. Because if you trade a
Nah,
breakout,
yeah.
it was difficult. So ideally,
Yeah.
okay, one more thing before we go, I want to explain. With box, there is a major box level and a minor box level. A lot of people will not know this. See, this box level, box low, it's nothing.
Hang on, which one? Yeah, that one.
This
Okay,
one
yeah,
here.
Yeah, that's nothing. Yeah.
Why is it nothing? You tell
Within the
me.
range.
Why is it nothing?
Because it's within the range.
Yeah,
That box is within
because
the previous
it is
box.
not a major swing low.
Yeah.
See, and what would make it a major swing low is when price considerably goes in the opposite direction after it. So even this was not a major swing low because price did not go considerably up. But this became a major box low because price went up after it. So that became a major swing low.
Yeah.
So take an example of this. Around here, this was not a major swing low around here. No, it became a major swing high after this. So then you can move your stop loss there. But box is a beautiful indicator.
Yeah.
Today, if I bring any, if I teach any beginners, I would say, put the box available for free in my profile in TradingView. Put that on. Trade its levels, but don't go blind. You know, you need to know what you're doing. So here you're trading breakout if you go for this. See, this
Yeah,
would be a
yeah,
setup
yeah,
one for people going long. But for me, it was not a setup one. Why? Because I saw this. I saw that. See? Let me bring the setup one template. I see that level. It didn't really hit it, but it's almost there. I go to the hourly chart. People are getting excited going setup one here. I'm not. Because I'm thinking short.
yeah, yeah, yeah. No, no, absolutely. It makes sense. It makes sense.
Yeah.
And that's why I think you don't want to get into the AO and Gator.
Yes.
Probably,
That's
yeah,
why I go
probably
like this
Gator.
now.
Yeah, probably EMA or Max. Probably box if you want. But other
No,
than that,
I'm not doing anything. I gave myself a challenge for the month of May
yeah.
to see if I can do it without any of those. Oh,
Mm-hmm.
let me give you a beautiful example. I know we've gone in 1 hour. It was supposed to be 15 minutes. This is what I traded, and I'm very proud of this. Euro USD. This
Mm-hmm.
level is obviously a major level. Why? Because look what followed after that. So it's a major level. Big players have played there, right? A lot of selling has started there. Okay. Yesterday the market is here, but my decision wasn't at this day. My decision was at this day, okay? 18th of May. How to time a trade that you saw on the daily chart, but you refine it on the 5-minute chart. Is it even possible? Let me show you. You already see it. You already see it.
Yeah.
What do you see? This is the hourly chart. Look at this. When I saw this price moving up, and I'm seeing that it's a 2.5 month trend up. It's hitting that
Yeah.
major level. I'm on the hourly
Yeah.
chart. What do I see? I see a doji with a big tail or a fruit candle. You go short. These are the fruits you want to take, not these ones. These ones, or you can take these as
Yeah.
well. But your idea would only be for a scalp.
No, that's within the range, right? You want to
Yeah,
pick the top
that's
and bottom.
yes. You picked it. See, this is not a fruit. This is a range-bound trading thing. So
Yeah.
this is the low. Hits it. You can go long and exit there. Not a problem. So what I did, go to the 5-minute chart. I actually shorted this. Exactly like that DAX chart, isn't it?
Yeah.
My stop loss, 10. I went with 15.
Mm-hmm.
Then I moved back to the daily chart. And I put my target point above this high. And I did nothing after that. It just hit it.
It's gonna waterfall now. Rest of the May, and you'll be minting.
This is so much fun trading this way.
Man, but like the higher time frame, I notice it's effortless. You let it run. Like on Swissy, I described my emotion, right?
Oh,
Like
Swizzy, you have a huge winner, isn't it? 12%?
so yesterday I was apprehensive, right? Because it was going up, but then I didn't let that affect myself, and I was like, no, I'm going for 10 hour, and daily is still downtrend. So let it run. Don't look at it, and look at what happened now today. I just added on the last seed 12.
No, this one. See here, if you are trading the hourly chart, so my idea now is that it's turning into a trading range.
Yes.
See, around here, it created a new low, but it was immediately rejected. So if we go to the 4-hour chart, see it's creating that range.
Yeah. And if
It comes to the range high. Tries it again. If I was paying attention, I'd be short here with a nice 40 pipper. But your method, I think, when are you short from? You are short from here?
I'm short. Let me zoom out. I think it was from
6th of
13th
May?
of May. Probably. Let me just check. I even lost the track.
You know, you were supposed to be short Swizzy from the 5th of April.
I was short on 13th of May.
Yeah.
Tiny seed just after the near the London open line.
Yep. So that's it. Yeah, that's what I'm doing for my FX. You actually see this is all I trade.
Yeah, now
Euro
you
dollar,
got me interested now.
Swizzy.
I'll start doing the analysis. Yeah.
Yeah, dollar CAD. Look what I did on USD CAD today. Let me show you.
Oh,
It's a very interesting. Hold on. I saw on the daily chart. Well, yesterday I went long, didn't I? Do you know that I was long on USD CAD?
no, I didn't know that. Sorry.
Right. So again, same method. I had this level on the daily chart. On the hourly, I saw this. I went long here, and I put my stop loss there. And then yesterday I got out somewhere here. Right? Today, I saw this, the bull flag, this channel coming down. And the beauty of this is that, look, you can see it on the hourly. Let me take it to the 30-minute chart. Same channel. 15-minute chart. Same channel. 5-minute chart. Same channel. You get it?
Yeah.
So I would see people post charts in the past, people who trade these methods. And I would see them and they would take a long from there, and I would say, how the hell did they know that they need to go long there? They did all of this analysis. They were aware of it. They were aware of price.
So what you do is eagle eye technique, right? Like zoom out.
Yes.
And then like if you see something on bird eye view, then you started zooming in. Otherwise you don't.
Yeah. And I saw a bull trend candle, right? And a bull trend candle will pull back and it will continue going up. And that's what I thought.
Yep.
But because dollar CAD is in a downtrend generally, and because it's in some kind of a range, two highs there, I thought the probability of this breaking high was low. So what did I do? I just took, it hit my target point, but I got out at 18.
I would call it, it's a bit more like a lion hunting method, right? You have your area. Area is defined by your marking level, and you let the price come and touch those level, and then you hunt. Then you go near.
It is hunt. This is the real hunt method.
Correct. And then you zoom in and go to near prey.
Do you remember this?
Just pounce it on right time.
Dollar yen.
Yeah.
I went long here because if you look at this, this was still turning into a trading range, but look at it. Trend candle followed by, and there are only two kind of candles, by the way. A candle is either a trend candle or a range candle. Al Brooks explains this. I learned this from him. It's a beautiful concept. A candle is either a trend candle or it's a range candle. So if it has bigger body, small wicks, it's a trend candle. But the one that we are talking about, I'm not referring to that one. The ones that we're talking about are the strong bullish and bearish trend candles.
Yeah.
These are just but generally any candle can be a trend candle. And the one that has wicks, it's a range candle. So dojis are all range candles. Look at this.
Yep.
And I'm thinking, I'm looking doji, 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 and then this one has a huge tail, closes up there. I actually wanted to short, to go long straight away here, and I have my 50 stop loss here. And this one I managed on the daily chart. I actually sat through this pullback, and then I got out there. So that's the end of this presentation. I hope you learned something. We talked about the trend bar, the famous bar, how to trade price, how to basically take ideas from the daily chart, the highs and lows of it. You can then trade those levels on the hourly chart, on the 5-minute chart, or if you're a beginner, you can follow, I highly recommend following our low bot strategy, which is available to members as well. But if you join us, you will be able to actually start from the beginning, where you learn what is the setup 1 and how we evolve from setup 1 to the hunt method and the current hunt point 2 method. And if you stay with me, I will also teach you how to trade price action now. But I think the best thing is to start with minimal level of indicators and learn the structure of the market, which we go through that. So before you go, once again, please hit the like button and remain subscribed to the channel. See you in the next video.